We're back with Shane Williams, CEO of West Lake Gold. He is an executive in the mining sector who's been calling for the gold price to go up. He's called this direction pretty much perfectly. We're going to find out what's next for his prediction for the outlook for gold. We're going to find out what's next for the entire mining sector. And we're going to find out what's next for West Lake Gold, an exciting announcement that Shane is going to make today. Welcome back to the show. Good to see you again, Shane. Happy New Year.
Excellent. Great to be on again, David.
We're speaking now on Monday, the 12th of January, a new high for gold. Take a look at my screen, $4,600. At this point, one has to wonder, because gold has been consolidating around $4,500 for a few months now, and it's been hovering around its highs above $4,300 since basically last October. And it's been about almost 3 months that it's been trading above $4,000. One has to wonder, Shane, what has kept gold so high for so long? Do you have any thoughts?
Yeah, I do. I think it's the general. There's a couple of things on a more macro level. I think it's a lot of concern on the US dollar, and so the debt levels within the US. And they seem to get more and more. The debt levels seem to get higher and higher. And also, I think another couple of is the uncertainty in the world. Obviously, we've had the Ukraine, we've had the Israeli, and now recently we have Donald Trump in Venezuela. So there is a lot of uncertainty in the world, I think. And a lot of people, usually when people get uncertain, they flight to gold. And obviously, the US dollar is under headwind, and I do believe there's a bit of a recession towards the back end of this year coming up in the US. And so I think that's driving a lot of it. And we still see demand on the central banks. We see a lot of demand still on central banks buying gold. So all those things are very good tailwinds for gold, which continues to increase every month.
What was your initial reaction when gold hit above $4,000, given that you've been calling for $3,000 since last year and $3,500? I remember the first time you told me on my show that gold was going to hit $3,500. That was at the time seen as an aggressive forecast, and of course, no longer. So when it hit $4,000, what was your initial reaction?
Yeah, the initial reaction was that I did expect it to get to that level. I didn't expect it so quickly, David. It has moved a lot quicker, I believe, than I expected it to move. In such a short period of time, it did consolidate around that level, but it has taken another lift over the last few months.
Yeah, what's next for gold, Shane?
Look, I believe we're going to see $5,000 gold. That's my view. I would say by the end of this year coming, you're going to see close to $5,000, if not $5,000 gold. It doesn't take long. If we're at 4,600 today, that's another $400. There's only another 10% roughly of where we need to get to.
What are the miners doing right now in response to the gold price? At $4,600 gold, the producers must be very excited. They must be enjoying tremendous amounts of free cash flow. And then juniors must be responding in kind as well. Tell us.
Yeah, I was going to say what they're doing is enjoying a lot of free cash flow. We have the quarterlies coming up now soon, or the year-end results will start to flow out now. Usually they come out in February, March sort of timeline. And I expect to see record free cash flows being generated from all those companies as they start to bring out the thing. Some of them actually probably from a margin perspective, we have seen oil prices go fall a little bit. So usually it's oil prices, sometimes oil prices inflation are rising according cost inflation with the price of gold. We have seen a bit of a fall off in oil prices. So from a major sort of gold miner, oil is very important. But now we're seeing a bit of a divergence. Oil is falling down, which is a lot of the input costs, plus gold is rising. So their margins are getting bigger and bigger, which usually doesn't happen. So I expect to see record free cash flows towards the year-end announcements, which come out in the next month or two.
So this is a chart of your company's stock, West Lake Gold, ticker WRLG. And the stock is up on a 12-month basis, 86%, outperforming gold, which is up 73% on the same period. So congrats there. Now, besides the price of gold, any other drivers of your company stock this year, you think?
Yeah, I think that really there was a bit of a, as some of your listeners will know, this asset has been through a number of different owners. Some have failed, some have gone through. So I think that there's, as we begin to deliver, as we've talked about, getting through the various stages, we are getting a bit of traction. We are getting a bit of a focus from the outside investor as we grow and hit these milestones. And that's causing us to track up above the price of gold. And I do expect that after now we've announced to even get more upside.
Okay, so West Red Lake Gold has been inching closer and closer towards production. And so the valuation of the company up until, I guess, the point at which you'll talk about the next announcement, the valuation has been primarily based on the net asset value of the deposits, right? Is that fair to assume?
Yeah. So normally in this phase, we were seen up to as a developer. And so it's the NAV of the company really as how it drives it. And there's a big difference in an NAV sort of rating of a developer versus a producer. And that's where you get that re-rating as you move from a developer up to now, an explorer developer, and now into a producer. So we do expect that net asset value or that percentage of that net asset value to increase. And so that will give us the re-rating, I believe, that we deserve as we go forward.
Okay, so give us the next major milestone that West Red Lake Gold is working towards.
Yeah, so as part of our commercial production, we've got to a certain level of stability, and now we're going to ramp up from there. And I expect that will happen towards the end of this quarter into the next quarter as a fairly high ramp up rate. And we're also working on an update to our pre-feasibility study. If you recall, we had a pre-feasibility study on Madsen, and then we had a PEA on Rowan. And the idea is to combine those two projects together with a new gold price, etc. And that will really set the bar, I believe, of what these assets can do in sort of a rising gold market. As an example, for the reserve calculation, we use $1,600 gold. We're in a much different environment today. And for the economics, we use $2,200 gold. So, those sort of numbers, as you put in the latest consensus forecast, which is up around 3,800 today, that makes a huge difference to the value of the company and the value of our operations.
Is it true, though, that because the price of gold has gone up, the costs per ounce, the all-in sustaining cost for producers, and to a certain extent, the exploration costs for juniors have also gone up in tandem?
Yeah, we are experiencing cost inflation, but because the price of gold is rising so much so quickly, the inflation is not rising as fast as the gold price. So there is that margin expansion happening. Normally they track together, but because we're seeing gold rise so fast, prices are rising, but the margin expansion between that price of gold and the cost is getting bigger and bigger and larger. As an example, gold, as I talked about oil prices, a lot of the big major producers, oil is a huge input cost for diesel and moving trucks and equipment. That's falling, actually. The price of gold has fallen from last year. And so you have that margin. Gold is rising and oil, which is an input cost, is falling. So you are going to get them record margins, I suspect, once they start producing their year-end results later this month.
Right. And the other, I guess, trap or risk that miners have to face is the fact that ironically, because they have so much money now, they're at a risk of overspending if they're not disciplined with what they buy and what they spend money on. How to avoid this trap?
So I think that's a very important point, David. If you remember in the last big gold run, in 2010 and 11, where the miners generated a lot of cash flow, there was kind of some, let's just say, purchases that were not really M&A, that were not really value added and accretive. And so over the next number of years, there was a lot of write-downs. And so, the investors are very wary of that. So I think there'll be a lot of focus this year on more giving back the money to shareholders rather than M&A. We have seen some M&A, seen some M&A tick up, but not as much. And I think there'll be a focus from shareholders to give back some of that money through dividends and buybacks. I do see that starting to happen as they get their year-end results out.
The transition from an explorer to a developer to now a producing company, which is exactly the timeline that West Red Lake Gold has followed. So tell us about this transition in the last 2 years, how this transition took place, how much money, CapEx, was spent to make this transition happen, and then at what point you will be officially recognized as a producer going forward.
Yeah, so normally as there's a number of stages. So obviously this asset, we bought this asset out of a bankruptcy, CCAA. It was bought for like 6 million Canadian dollars, if you recall. And so we've moved, from there we were straight away a developer. We reset our expectations on development. We said it would take us about 2 years to go into production. And we're pretty much bang on to where we said we would. And we've added, when I started, there was really very few people. We have 250 people on site at the moment working and operating this operation. From a de-risking point of view and from a credibility point of view, I still think it will take, we're in commercial production. People want to see how 2026 perform, how we perform in 26. As we bring out the quarterly, the guidance, I think that will give a lot of people comfort that, we're in commercial production and we're ramping up and addressing those issues.
Tell us about the financing aspect of transitioning from an explorer to a producer. One of the concerns that investors have, not just with your company, but with any mining company that has similar aspirations as West Red Lake Gold, is that once you raise a lot of money to try to make your company into a producer, you're diluting your shares. That's just the nature of how things work. So how do you navigate share dilution while at the same time expanding your portfolio or preparing for production?
Well, and so this is key for West Red Lake. Obviously, as you move the company forward, you have to raise money. And obviously, you raise money through share purchases. But I think that the offset for West Red Lake is that you can take that, you're taking that dilution, but you also have to be adding value to make sure that the dilution is adding value. And a lot of companies do that, and they keep doing it because they don't get to production. I think that getting the transition, that dilution that we've taken, that money we've diluted, is directly tradable into getting the company back into commercial production. And that's really the trade-off that West Red Lake has focused on. We knew we would have to raise money to get the company back into production. And so now we're back into production. So that becomes behind us now as we generate free cash flow.
How much money did you have to raise, Shane?
So we raised well over 100 million Canadian dollars.
Okay. And has that affected your market cap during that period?
It has affected. We have two things going on, David. One is we've obviously had to raise money and take some dilution, but other thing as well is we have that overhang on the asset. So both of those has had an effect on our share price. If you look at our share price while it's up compared to some of our peers, we're very undervalued and we haven't risen as much as our peers. A lot of our peers have risen double what we've risen, some even triple. So I do think we'll start to see that now as we move into production. We will get re-rated close to our peers, which some of them are double our market cap at the moment.
So if somebody says to you that your leadership approach is to take short-term pain for long-term gain, would you agree with that?
I would agree with that. Building a business, building a company, what we're trying to do takes time, it takes effort, it takes a lot of focus. But the return on that is that you're into production. We're now producing gold. We're generating cash flow in a time that it has record gold prices. And as an example, West Red Lake, well, there's very few companies today in Canada that are coming into commercial production in 2026. So we're one of the only few companies into production.
So a lot of juniors don't make this transition or even don't want to make this transition, not just because of the financing and share dilution aspect, but because they simply don't have the experience as operators. Tell us about how you're fixing or going about this particular problem, or a solution to the experience
problem? Early in the start of the project, as we set up, we focused more on exploration, sort of development style people. And like into this year or into last year at the start, we hired quite a number of people who are operators. And so the transition of the company focused more onto operation. We've hired a management team and a set of VPs, a management team that all have experience of operations, all have worked in operations, all have worked in operational companies. And on the mine side, we've added people who have worked in operations and, more importantly, worked in these sort of operations, these high-grade, underground, narrow vein mining. That's very important. You've got to hire the people who understand the task at hand. So we've transitioned the company into that sort of a company, an operational company.
So I think just from a broader generalist investor standpoint, somebody who may not have looked at the gold miners themselves, they're looking at the price of gold, like we talked about, $4,600 today, a new record high. And the fact that it's up 71% over the last year, and like you said and others said as well, $5,000 is in the cards, more upside to go. Why should someone look at a gold miner? I understand that your company, like I showed everybody, has outperformed the gold price. So obviously we want that leverage, but we're also taking on additional risk for an additional 10, 20% gain. 70% just on the bullion itself in 1 year is not bad by anybody's standards. Why not just stick with the bullion? Why even look at a miner right now in current environments?
Yeah, so people can buy bullion, but bullion is a different bullion. A lot of people buy bullion for safety, for security. Gold is rising, but I think that there's a catch up now between the gold miners and the price of gold. If you look at, there's a huge disconnect between the price of gold. If you track the price of gold and the price of the miners, up to a number of years ago, they tracked very, very similar together. If you overlay that, and so they tracked very, very similar together. Yeah, if you get the GDXJ over the price of gold. And what we've seen now lately is there's been a bit of a catch up to do, as you can see there, versus a bit of there's been a really, really disconnect, and the price of the gold miners is rising very fast.
Well, you're in the mining industry. You've seen these cycles go up and down. And if someone were to ask you, Shane, at what point does the mining sector, the GDX or the GDXJ, reach a bubble? How would you even go about answering that? I'm not talking about your company in particular. I'm talking about the entire sector. What signs would you look for as an executive on the inside?
Yeah, so what I would look at is as a percentage of the GDXJ as a percentage of the TSX or one of these areas. Normally the percentages are gold miners or commodities. That's usually a large percentage. If you go back to 2010, 2011, it's a percentage. It was a much higher percentage than it is today. Obviously, we've had a huge uplift in AI and tech stocks, but gold miners are down. But normally they revert over time. And I would see that once you start to get back to historic levels as a percentage of the big index, that's usually a sign of that they are beginning to get fully valued. So we're a long way away from that yet, but that's kind of a trigger for me.
Given this historic rally, have you noticed a shift in the investment demographic for your company in particular? Have you attracted new tiers or demographics of investors?
We're seeing a lot more, historically now in the last number of years, the institutions have been away a little bit from gold. So they are beginning to come back into the sector. They have gone a lot into the majors, and now they're beginning to come down the sector. Intermediate gold companies, now into the developers and junior producers. So we are seeing that. And we're also seeing a lot more of the younger crowd. Gold is always seen as but the younger crowd are beginning to, the Bitcoin crowd, they're beginning to come across the gold because they're seeing that leverage. Some of these returns this year are quite high. I mean, Bitcoin sort of returns. So they are beginning to come across into the gold mining industry.
Okay. And the entire gold mining sector, what are they planning for in light of nearly $5,000 gold? Is there a fundamental shift in strategy at this point? Or do you think that this cycle is still similar in terms of tactics to 2011?
I would argue that it's different. I would argue I don't know if a good analogy is the gold as the oil companies. Over the last number of years, they've generated a lot of cash flow, and they actually gave that cash back to investors. Special dividends, share buybacks, and I do suspect as we get into 26 with that level of cash flow, there'll be a lot of pressure on the gold mining companies to provide some of that returns to shareholders, which hasn't happened historically. More so, they've been pushed. There will be some growth and growth opportunities, but I do expect some pressure to give back dividends and share buybacks to investors.
The dividends and share buybacks. Well, let's just focus on dividends first. The fact that you're now becoming a producing company or a producer, are you thinking of dividends yourself?
No, we're still a bit small for that, David. It's usually the bigger companies, when they start to think about dividends, they get over 400,000 ounces a year, much bigger, before they think about dividends. So for us, it's more, we're going to scale our growth over the next number of years.
And right now, I believe your market cap is somewhere around $435 million. Is that correct?
Yep, that is correct.
So if somebody asks you, how do you 10x that into a $4 billion company? What's the roadmap there?
So the roadmap for us is more getting the scale and size. Gold mining companies are valued on scale and size. So for us now, the next opportunity will be to use our growth, our production, to buy our M&A potentially and look at other alternatives. Maybe it's some consolidation, maybe it's look at other companies, but also use that cash flow to grow our own business. We have a number of projects that we've come out, and they will be used to grow the company over the next number of years.
Do you have this ambition, this aspiration to become a large producer?
Yes, West Red Lake's goal starting was always to grow to be a mid-tier producer in Canada. That was always the goal when we started this. Madsen was the first stage of that. We are now through that first stage, and so now is the opportunity to look at the next stage of growth as we move forward.
Do you have any interest in other metals, given that copper is at new all-time highs, silver is at new all-time highs, pretty much everything is skyrocketing, palladium and platinum, the silver metals, but have the white metals rather, have both done very well this last 12 months?
Yeah, our focus will be gold. We're a gold mining company. We see the leverage to that gold over a number of years, so we'll be focusing on gold at this
Okay.
stage.
So final question, at what point exactly do you start producing? Is it today?
We are producing today. We have produced last year 20,000 ounces of gold. And so we are a producer today. We are making gold and we are making free cash flow today.
Okay. What's the next milestone we have to watch for?
The next milestone, the big milestone, will be our quarterly results at the end of Q1 sort of number. And then in the mid-year, we'll be putting out a pre-feasibility study again on Madsen. They're the two big milestones this year.
Thanks very much, Shane. Where can we follow your company?
You can follow our company on westredlakegold.com. We're on the TSXV. We're also on the QTCB.
All right, we'll put the links down below, so make sure to follow West Red Lake Gold down there, and Shane as well. Thank you very much, Shane, for coming back on the show. Congrats again on this transition, and we'll talk again soon.
Excellent. Thank you very much, David.
Thank you for watching. Don't forget to like and subscribe.